Hi everyone, it's Paul Nagpal from Remax Hallmark, and I'm here with Brenda Manning today. Brenda is a trusted partner at TD, and she's helped a lot of you, if not most of you. Brenda, if you could kind of give us a little bit of an overview about where the market is and how things look for the year.
Absolutely, Paul. So moving forward, we're still seeing a very low interest rate environment, which is good. We have seen a slight increase in rates over the past couple of months, but nothing severe, nothing on a major impact. As far as rule changes, we did see in October, CMHC, or as we know, Canada Mortgage and Housing, did make a change to the qualifying for all high-ratio mortgages. For some clients, it reduced their qualifying amount by about $100,000 to $150,000. It had other people making some choices, i.e. not getting into maybe a detached, but having to settle for a townhouse or a condo. Moving forward, we've got most people that are pre-approved today and are qualifying at the higher rate. Impact on that is we are seeing a lot of clients still going in on a high ratio basis. If that doesn't work, we are seeing people that are getting some gifted money to come up with higher mortgage amounts.
Okay, fantastic. And there were some changes to the CMHC policies last week where they increased the insurance premiums. Could you tell us a little bit about that?
Yeah, what happened last week is CMHC did announce an additional change, and that change is effective on March 17th of this year, which means the premiums, so the premiums that's added to the mortgage based on down payment, have gone up anywhere from 0.4 to 0.5%, depending on the amount of your down payment. It is a small increase on an average $100,000 mortgage. It's about $100 difference. Sorry, it's about $500 difference. The impact of that change, however, is very, very low on your average monthly mortgage payment. It's only costing you about $1.24 additional money per month. So that being said, it's still time to get into the market, take advantage of the premiums that are in place today, and try to avoid the March 17th increase.
Okay, perfect. And just as an update from a market perspective, the market is unseasonably, the real estate market in general is unseasonably busy. We see that across the board with the houses and with condominiums. Probably the weather has got something to do with it, but also the fact that there's just not enough supply, there's not enough homes on sale in the market, and there's a lot of buyers who are looking to take advantage of the low interest rate environments that exist. In addition, we're seeing an interesting trend come up, and this has been in play for the downtown market for the last about year or so, which is multiple offers on condominiums. And what we're seeing now is basically a spillover over into North York, into Scarborough, into even North York, South Richmond Hill. So that's something interesting. A lot of the condominiums now are being listed below market value in the hopes of getting multiple bids. So there's an interesting trend that's going on there, and that's again in line with essentially people not being able to afford houses and getting into condominiums, and larger condominiums at that. So what we're seeing also is because of the larger down payments required, the buyers are having to borrow their down payment from sources like their parents or gifts and so on and so forth. So do you see that as well, Brenda?
Absolutely. What we're seeing today, because of the tightening up on the qualifying, especially for the first-time buyer, we are seeing that the first-time buyer will approach family looking for some gifted money to get them into the price range that they need to qualify for. So that being said, we're seeing a lot of existing homeowners that are leveraging their equity today to help their children today. Because again, you've got to get into the market sometime, and we're finding with the low interest rates today, the affordability is much more greater than it may be down the road. So leveraging equity for parents is a common denominator today and being used for down payment.
Yep, and again, I think it's always a wise decision to have those have a pre-approval done, locked in, And I think how it plays out is that it kind of locks in your rates for 120 days and just gives you the the wiggle room to kind of make decisions as you need to.
And I think just speaking on the pre-approval, it's really, really important today for clients to be pre-approved just for the scenario that you were talking about of multiple offers. The multiple offer situation today really essentially means you need to go in with the cleanest offer. It doesn't necessarily have to be the highest bid, but it has to be a clean offer. That being said, if you are pre-approved, you know going in the absolute maximum amount you qualify for, thus allows you to compete in those markets and go in with a clean offer.
Perfect. So if you have any other questions for us, for Brenda or myself, you can reach out to us. Our contact information is below, and we would love to answer any questions that you may have. Thanks for watching.
Thank you.